Well, hi everyone, and hope everyone's doing well and you're keeping yourself safe. Today I have a really important topic to talk about. I'd like to talk about the current economy and some of the things that are probably going to change over the next couple of years and what the trends are looking like for the next 5 years. And then based on that, what could be potentially the top 25 stocks that you should be thinking about for your future. So with that in mind, let's move ahead. But before I do that, thank you again for taking the time to see this video. If you like it, please hit the like button and please subscribe so you can stay abreast of all of the latest videos, and don't forget to hit the bell icon. Thank you. Before I go into the video, I just want to take a minute and I put together a slide to talk about how you could keep you, your family, and your neighborhood safe from COVID. So these are the 6 steps. Everybody knows them, but I think it's worth putting it out there. Make sure you wash your hands at least for 60 seconds often. Stay 6 feet apart. Definitely wear a mask. And help our seniors. Don't forget about our seniors. They need help. They need people to pick up groceries for them, to order groceries for them, to pick up their medicines, etc. So don't forget about them. Make sure you disinfect all your surfaces as often as possible. And most importantly, if you get sick, make sure you seek medical attention right away. All right, thank you. Stay safe, everyone. Let's move on. The quick disclaimer, I'm not a financial advisor and investing in stocks is risky. So this video is purely for informational purposes. Please take this information, do your own research and convert that to knowledge. And with your experience, eventually convert that to wisdom. Thank you. So the market forces in June, and today is actually June 28th. So on the left side, I have some of the forces that existed pre-COVID. So this is what the situation was in the December, early January time frame. Stock markets were at all-time highs. We had the lowest unemployment rate in history in the United States. I think it was like 3.5% unemployment. And a lot of the trade war situation was getting diffused between the United States and China. Everything seemed like we were on a path to progress. In general, we saw that global wars were actually being reduced and even terrorism was being reduced. The United States had taken care of ISIS. It seems like Al-Qaeda was kind of flying low. Things were on a better path. And definitely some of the new economy stocks like the Googles and the Facebooks of the world were surging. Oil prices were relatively stable, around $40 to $50 a barrel. And then the BRIC countries, so this is Brazil, Russia, India, and China, were stable, were growing, and seemed to be powering the world economy. The US dollar was at an all-time high, and housing markets also were at an all-time high. Global warming was at a critical level. And definitely you could already see the disparity between the rich and the poor was increasing because of all the billionaires and the multimillionaires in the world. And so the gap was starting to get really large. Now let's talk about where we are June 28th. COVID infections are actually surging right now. We have more than 9 million infections worldwide and more than 2.5 million in the United States as of today. These are huge numbers and they're going to continue to grow for the next 6 to 8 months until we have a vaccine or something that's better. Now let's talk about post-COVID 2019. So the stock markets right now are fragmented. Clearly you can see that, let me change the color here. We have a lot of companies that have been doing buybacks and dividends, and there's been some direction from the government to basically slow down or even stop buybacks and dividends. And really, a lot of the companies are reassessing their strategies for growth. The unemployment rate, which was around 3.5% previously, has shot up 400 to 600%, and it's as high as 14, 15%, maybe even higher. There are new trade wars in place. The United States is going after China as part of a retaliatory action for COVID, and it just seems like things are heating up. Overall, terrorism and global wars seem to be heating up. You did see the Houthi rebels in Yemen fire missiles out into Saudi Arabia. We did see some action starting to perk up again in Syria and other parts of the world. definitely action going on in Africa. So you start to see some of these micro wars or battles heating up. The other thing that's happening is stocks that deal in a contactless world where people don't have to interact with you. Those stocks are just surging. These are the grocery delivery companies, the Amazons of the world, etc. Oil prices have been extremely volatile. In fact, for a period of time, oil prices actually went negative for a couple of days. That's crazy. I mean, right now, oil seems to be somewhat stable at around the $30 to $40 a barrel, but it was at $10 a barrel, or even a little bit less than that for a while. A lot of the BRIC countries, so Brazil has been hit really hard by COVID. It has one of the highest growth rates. Russia was hit very hard. India is starting to see huge COVID increases. And definitely China already had a wave 1 and maybe in the midst of a wave 2 right now. The US dollar is still high because it seems to be kind of the last resort for the world, but we start to see some cracks forming, and the long-term trend is not good for the US dollar. It's probably going to weaken over the next couple of years. Housing markets are still somewhat high, but we've already seen, for example, in the San Francisco area, rents are down about 10% over the last month or so. So there's definitely some cracks forming. Global warming still at critical levels. I think the disparity and the social issues are at a huge and alarming and critical situation, with the disparity between the rich and poor probably being the worst I've ever seen. The other thing interesting happening right now, specifically over the next week or two, is pension funds are in a sector rotation, and what that means is they've had these huge gains over the last 2-3 months in the stock market, and that's put their balances out of whack. So for example, if you had funds in a sector fund and you wanted to have a 50-50 allocation of stocks and bonds, just because stocks have gone up so much over the last 2 or 3 months, you're probably at 70% stocks and 30% bonds. So what's happening is sector funds are starting to sell stocks and put that money back into the bond market. And that's going to have a huge impact on the stock market probably in the short term, because something like 15-20% of the money in the stock market is coming from sector funds, from pension funds. The other thing that's happened is I talked about some regulations that are starting to come in place in terms of controlling stock buybacks and also issuing dividend growth. That's going to have a big impact on the stock market also in the future. So essentially, if you look at, some businesses are losing and some are winning. So the businesses that are generally losing are things like restaurants and bars, obviously travel related like airlines, cruises, bookings, hotels, etc. Interestingly, housing in urban areas seems to be going down because people want to move away from the high density housing and move maybe into the suburbs, or even go back and live with their parents. I mean, a lot of the young people are actually going back home and living at home. And so inner city apartments, condominiums, people who have rentals in the cities, they're going to get hurt. Oil refiners and fracking companies are definitely hurt with oil prices going down and fluctuating so much. The other thing is, because of the fracking companies getting hit, for example, a lot of banks issued something like close to $1 trillion in loans to fracking companies over the last few years. And they're not going to get a lot of that money back because those companies are going bankrupt. So there's a lot of unpaid loans. There's a lot of unpaid mortgages. Something like 8 to 10% of people are not actually paying their mortgages right now. So that is starting to hurt the banks. Companies that have any kind of exposure to China, either through their supply chain or through a customer base, definitely are hurting and will continue to hurt. Insurance companies are getting killed because they have to pay for a lot of losses. So there's going to be a lot of claims on insurance companies over the next probably years to come. Definitely manufacturing is hit hard, like aerospace is hit hard because of the slump in the airline industry. Infrastructure is hit hard. Food preparation is definitely hit hard because that's a contact business. The meat industry, as you probably know, has been hit really hard with COVID. We are in short supply of beef. The other day I was at Costco to buy meat, and you could see that we had a lot of empty shelves, and so meat industry is hit hard. Commercial properties and rentals definitely hurting as companies stop paying rents. Companies go bankrupt. Something like 20 to 25% of the companies in this area on the left side of this chart will probably never recover from the COVID situation. On the other hand, there are some areas that are thriving. Food delivery is doing really well. Everybody is buying their food, whether it's fast food or you're getting food from restaurants, it's being delivered to your home online. Grocery and shopping delivery, obviously, everybody knows. Online shopping like Amazon, they're killing it. Online training and classes, as more and more colleges shut down and probably don't plan to open in the fall, a lot of those classes are being done online. So online training and classes is definitely booming. Interestingly, as people avoid each other socially, they are still interacting with each other online through social messaging, through chat rooms, or video calls, things like that. So that's growing. As I mentioned earlier, rural housing is growing. So this is housing in lower density areas as people from the inner city move out to the suburbs. Now this could be a short-term trend, maybe it's for the next couple of years until we recover from COVID. We'll have to wait and see. Businesses that generally have a global exposure seem to be doing better than businesses that have exposure to China or exposure just in the United States, etc. Obviously, biotech and healthcare is doing great as a lot of companies are on a search for a cure for COVID and a vaccine for COVID. Technology stocks are doing really well, especially if they have minimal China exposure and if they are based in the US. And then banks, interestingly, are on both the lists. So banks that have access to government programs are actually going to benefit because they get a commission for every loan that they give out from the government program. And also, as interest rates eventually start to edge up because of the weakening dollar, I think banks will benefit. Okay. So what do you do now? I think the first piece of advice I can give you is take profit in your stocks. Most of you have done really well these last few years, maybe even in the last 3 months. And this is the time to take those profits. Let's move up here. Try to position yourself at least 33% in cash, if not more. This is the time to get your list of the top 10 to 20 stocks you want to buy ready that you want to hold for the next 4 to 5 years. And wait for the right opportunity to enter the market, but don't enter it all in one stroke. Maybe do it over 3 or 4 periods. So if the market drops 15-20% and you have a stock that's hitting a good price, buy it, but buy only a little bit of it. Wait another month or so, maybe buy another 25% of it. Wait another month, maybe buy another 25%. If you can, try to sell your home that's in an urban area before the fall of this year and move to a rural property so as to reduce social contact. Definitely put off expensive purchases. Convert 3 to 5% of your assets to real gold or silver bullion that you can buy. Keep it away safely, and definitely into gold and silver mining stocks. I think the next 6 months is going to be very interesting. Obviously, do not travel, or at least limit your travel to areas that are not dense. Try to avoid getting onto planes. I think that's high risk. Follow social distancing rules and definitely stay away from large crowds. Okay, with that being said, what are my 5-year trends and projections for 2025? I think the first thing you're going to see, you're already seeing it, is that the electric vehicles really take off and they start to dominate new car sales. And basically the IC engine is going to die a slow death over the next 5 years. I think AI, or artificial intelligence, starts to become mainstream, and it definitely helps us make decisions faster and I think possibly better. I think autonomous driving is going to take over. Every single manufacturer is going to be forced to put in a software suite to help you with autonomous driving. And more importantly, vehicles actually start to connect to each other while they're on the road, and they start talking to each other to help avoid accidents. Maybe even sharing data across each other. Data analytics is going to really power the world. It's going to influence everything, whether it's medical breakthroughs, whether it's treatments, marketing decisions, buying decisions, just about everything is going to be driven by some kind of data analytics engine. I think you're going to see amazing and novel medical and biotechnology solutions come through, such as vaccines for COVID, other coronaviruses, CRISPR, which is gene modification, immune therapy, teledoc. Most people, I think 30% of people are not going to go to the doctor anymore. They're just going to do it online. Robotic surgery, things like that. So you're going to see some amazing innovation in this area. The other thing is most teenagers interact more probably socially on the internet and through WhatsApp and some of those other apps. But I think what's going to happen is because of social distancing, even adults are actually going to do that a lot more. So that's going to become mainstream. Internet social is going to become mainstream rather than meeting each other personally. I think very importantly, the need for business travel is going to drastically reduce. And that's because of video conferencing. I think that's going to really hurt airlines. I think augmented reality, virtual reality is going to become universal for gaming. A lot of people are going to be staying home. They're going to be playing more games online. I think a lot of the service solutions are going to be augmented reality to maintain equipment, complex equipment, things like that. And really, there's going to be a lot more virtual experiences, maybe even virtual travel down the road. High-speed internet is going to become pervasive. I think I even heard a couple of days ago that Tesla might be getting into this at 1 gig a second. That's going to become necessary and universal. And the internet is going to be absolutely everywhere, ubiquitous. The Internet of Things. So devices are going to be connected, whether it's your clothing, whether it's your computer, your phone, your anything, your TV, everything is going to be connected to everything else. You're going to see this massively over the next 5 years. So with that in mind, here are 25 stocks that I put together. And what I've done is I've split them up into basically 8 different areas. And I've got some buy prices, I'll give you a range to buy, and I've got potentially 20-25 target prices. So for example, if I take the internet and social area, I think Google's a great buy, somewhere between $1,100 and $1,200 a share. And I think that is going to be around $2,300 by 2025. Facebook has massive upside because they haven't yet monetized a lot of their applications. I think Alibaba has, again, great upside. Same thing with biotech and health. I think AbbVie is a great company, amazing upside. I think Vertex Pharmaceutical is just incredible upside over here. Bristol Myers, another pharmaceutical giant, has really good upside. On the financial side, I would say Goldman Sachs, good upside there. BlackRock, incredible upside. Berkshire Hathaway, I think this stock has kind of languished over the last 2-3 months because Warren Buffett is holding cash and getting ready to buy. I think when he does buy, this is just going to take off. Microsoft on the technology side, again, great stock to buy. Salesforce.com, CRM, ticker symbol CRM, great stock. Qualcomm, another one that's going to benefit from 5G. On the consumer side, obviously, Amazon, everybody knows that one. I would look for a price of $1,700 to $1,900, somewhere in that range. If you're lucky, you might get it on a bad stock market day. This has upside to close to 5,000 in 2025. I think Apple, I've mentioned this one before in some of my earlier videos, somewhere between 230, 270, if you can get that in. Good price of 530 in 5 years. Uber, I think, is a good one because of the Uber Foods and some of the newer businesses they're getting into. So I think that has good upside. I think on the artificial intelligence electric vehicle area, obviously Tesla. I think I've given a pretty large range there, 550 to 750, but you could get it on a bad day in the stock market and it has amazing upside there. Albemarle, a lot of people don't know about this, but this is one of the global leaders in lithium material for batteries. And again, this is a great stock to buy in this range. Baidu, another internet search engine, basically the Google of China, I think wait for a pullback and that has some good upside. I think on the semiconductor side with IoT and everything else I talked about in the previous slide, semiconductors are going to rock. I think Lam Research is a great company from a semiconductor equipment perspective. NVIDIA, I think for IoT and everything else, artificial intelligence, this is going to rock. TSMC, a lot of people don't know this, but pretty much most of the world's computer chips are made by this company in Taiwan, Taiwan Semiconductor Manufacturing. Incredible company and something you should have in a portfolio. And finally, a few speculative stocks. I think I put Disney in the category of speculative because Disney's hit hard because their parks are shut down. Some of them are starting to reopen, but I think they're going to be shut down again. I think they're hit hard by their cruise line shut down. But the Disney online portal is doing pretty well. So I would say a buy price of 80 to 90, potentially 230 plus in 5 years. Delta Airlines, that's the only airline I would touch, and probably at a price of 20 to 23. And then Carnival Cruise Line, this is extremely speculative. I would say somewhere between 8 and 11 if you buy it. Potentially, if they survive, this could be around $33 to $40 a share. The other interesting one here is NIO, which is kind of the Tesla of China. Even though Tesla is in China, there's already a Chinese company that has started making some pretty nice electric cars. And if you can get that in the $2.5, $3.5 range, I think that's a hold and could go as high as $10 a share over the next few years. So with that in mind, once again, I want to urge each of you to stay COVID safe. Remember, your safety, your family's safety, and your future is really in your hands, literally in your hands. So thanks again. I hope you liked the video. If you do, please hit the like button. Please subscribe and hit the bell icon. I will try to post a video about every week or so. And once again, thank you for your time.